On one of my mastermind sessions yesterday, somebody asked me whether they should sell their own home and use the equity from that to invest in commercial conversions. Now this person had £450,000 equity in their property, and I talked them through how they can get into commercial conversions, create financial freedom, leave their full-time job, which is what they wanted to do, create regular cash flow, have capital appreciating assets, and go into property full-time. So in this video, I'm going to cover all that for you very sharply and very succinctly. Enjoy. On one of my mastermind sessions yesterday, I was asked by one of the mastermind attendees on how and what he should do in terms of getting cash to invest in his next property deal. And as we got talking, as you do, we established that he owns a property and it's worth £650,000, has a mortgage of £200,000 on it. He's lived in the property since he's owned it, so there's no capital gains tax to pay, and he'll get best part of £450,000 if he sells the property and invests that money into future deals, or he can get around about, let's just say, £200,000 to £250,000 and turn it into a buy-to-let, or just refinance it anyhow and pull some of the cash out. So as we got talking, he wants to do commercial conversions. That's to buy commercial property and convert it into residential. And he's quite keen to get started pretty quickly. So the question I asked him was, how do you feel about selling your house, renting, and then using the £450,000 to invest in commercial conversions? Now, unlike most people, this chap was quite open to that. He said, I haven't thought about that, but now that you've asked the question, it seems like a plausible thing to do, and I'd be very open to it if I can see how I can make the plan work. So I talked him through how he can make it work. I'm not going to go into that much detail as I did yesterday with the mastermind student, but I'm going to share with you as much as I can to give you kind of a broad feel for the answer that I gave him. So where we pretty much started was, okay, you've got £450,000 cash. If you sell your property, let's forget legal fees and everything. Let's keep the numbers really easy. You've got 450 grand cash. So I talked him through two examples, live cases that I'm working on, which are around this figure here, and showed him how he could do something similar. So the first one is, I've got a client who we've helped buy a property for £375,000, about 15 miles north of Peterborough. It's a commercial property and it's got 3 floors, grade 2 listed, and just had the drawings back from the architect, and he can get 12 flats on there from memory. 8 are 2-bedroom flats and 4 1-bedroom flats. That's 8 flats plus the downstairs, or the ground floor will remain commercial, or kind of 3/4 of it will remain commercial because it's in the town centre of a market town, and the local council are very keen not to lose the downstairs commercial space. So let's look at the numbers and see how this 450 grand fits in here, and whether or not it makes sense for our mastermind student to go into commercial conversions. So 375 is where we start. We've got 12 flats, and let's just assume it costs you £50,000 per flat to convert into residential use. That gives you £600,000. Again, keeping the numbers easy, it depends on the size, how much work's required, how difficult the work is, the type of materials you're using, the spec. I'm keeping it really simple. Now someone out there might say, you can't do a flat for 50 grand, it costs you £75,000. The only thing I would say to that person is, I've done quite a few flats where it cost us £50,000 to get it to a very good standard, and you can see some of the videos here. If you look at the London Road Boston project, if you look at the New England Club, when you look at those developments and some of the video footage, you'll see the quality is really high, and the flats are really good. And on both, on London Road, started just before COVID hit, pretty much a day or two before. And during COVID, we were able to get 21 flats rented out, I think in the space of 2 weeks or something like that. Extraordinary. New England Club finished earlier this year. I think it was end of January or February. Within 4 or 5 weeks, all 12 flats gone. And the reason why I'm telling that to you is the standard was very good. So when people walked in there, had to say, this looks like a brand new property pretty much. We like it here, we'll take it. So 50 grand, I'm not that far out, but again, horses for courses, it depends. But for the purpose of this conversation, we don't need to get into why is it 50 grand, why not 75 grand. That's going to defeat the objective. So £600,000 is what it's going to cost them. 375 is what they paid, and let's include their legals and a few of the costs and add another 25 grand. That gets them to 400 grand purchase price. We've got 600 grand here. Let's add in another £100,000 in terms of interest costs and other expenditure. So you get the 400 grand purchase price. In fact, for good measure, let's call it 200 grand other costs, including bank interest. So we're on £1.2 million in terms of the total cost of this particular project. Let's now look at what each flat is worth. So in that particular area, a 2-bedroom flat is worth 125 grand each. And a 1-bedroom flat is worth 100 grand. I hope I've got the maths right there. So that gives us £1.4 million for the total cost of the flats. Then you've got the downstairs commercial, which is going to rent out for, according to a couple of local agents, between 25 and 30,000 pounds per annum. So the value of that space is going to be it's more than 300 grand, by the way, I'm pretty sure, but we'll just call it 300 grand to keep it really simple. So we'll add that onto here. So the total value is £1.7 million. Now, if this person refinances and wants to get as much money out as they can, let's say they get 75% loan to value, including the commercial space, just to keep it really easy. Let's look at the numbers. So we've got the 1.7 million value. We refinance at 75% loan to value. And by the way, you can get more than 75% sometimes. We got 80, I think it was 81.2 or 81.5 or something like that on London Road, Boston with Interbay. So you can get more than 75%. I'm going to keep it really simple here, and 75% of this gives us 1.275 million. Now let's look at the costs before we go any further. And you'll recall, this is the magic number. 1.2 million is the cost over here, which includes the commercial office as well. So if this person gets 1.275 million back, they get all of their money back that they invested to buy. And remember, this person has got 450 grand. We only spent 375,000 pounds, invested 375,000 pounds. So that's 75 grand cash left aside for something else. So they get all of their money back. They get all the money that they're going to borrow from a third party lender for the development work back. And let's just assume that the other 75 grand goes into their own pocket. So now they've got some extra cash. From there, there'll be some fees payable in terms of arrangement fees, brokers fees, that type of stuff. But again, let's just keep it easy and say in fact, let's say 25 grand goes towards that, he's got 50 grand left. So he's created 50 grand extra cash flow as a lump sum, got all his money back, paid off the development finance, and now let's look at his cash flow. So rent in that particular area, I happen to know, is £800 per flat times 12 months, so per flat 9,600 for each 2-bedroom flat times 8 plus the 4 2-bedroom flats, which is £700 per month. 700 times 12, 8,400 times 4 flats. $33,600. So in total, the total rental income we've got is that plus 6,000, which gives a total figure of 110,400. So we carry that forward. Plus the £25,000 for the downstairs commercial, although agents think we'll get between 25 and 30, we'll keep it at 25,000. So this is the flats, and this is retail or office space. Gives us a total figure of 135,400. That's the total cash. I know they could possibly have some voids on the flats, but let's just keep it very simple. And what you can do is, if you talk to agents, they'll give you a deal where you can have 2 or 3 years guaranteed rent. Some of them will give you cash up front. On the New England Club, I was offered a hefty amount to give it to somebody on a lease for 2 years, plus they wanted to pay all my legal fees, all the costs for setting up the arrangement, and a lump sum at the start, which I decided not to go with because I wanted to manage that property in my own way. So we've got total 135,400 coming in. That's our rent. Our mortgage costs on 1.2 million, and let's say at 4%, this is interest. That's meant to be 4%, by the way. That gives us £48,000 in cost. So we take off the 48,000 from the 135,400 to tell us our costs after interest payable to a lender, which gives you 87,400. And let's say there's other costs in the year in terms of insurance. There won't be that much of a wear and tear with the new flats, but we include some of those in there, a few of the costs, and let's call it £17,000 for other costs, 17,400. You're left with £70,000 net after all costs, plus you've got 12 flats and the commercial space downstairs, plus you've got the capital appreciation, plus you've got all your cash back. So this particular person using this with a 450 grand has now got £70,000, and let's say the area that they're living in, because it was a 650 grand house, they want something similar, and it costs them £1,500 per month to rent that property out or similar property out, and call it so 18 grand for the year. Limited company or partnership or in their own name, let's not worry about the tax too much. Once they paid the tax, whichever route they use, they'll have more than 18 grand left over from this £70,000, whether it's a limited company or in their own name, to pay for that. Plus they've created some extra cash flow for themselves. I'm not going to go into the numbers, into the tax consequences, whether it's corporation tax plus some personal tax by way of dividend or salary, or if the property is just in their own name, income tax. But what I can assure you is they'll have basically enough money to pay for a house, to rent out, plus have some extra cash coming in their pocket. This particular person's got a full-time job. They want to leave that job, go into property full-time. This will be a massive step towards that. It might not be enough to cover their full-time salary, but once they've done one of these, the next one, because remember they've got all their cash back, the next one they can. And this person, if you look at, remember the early example, created an extra £50,000 cash flow. So that 50 grand that they got on refinancing, they could use that to cover their first year salary, leave work, and then focus on property full time, and do another deal like this, create something similar again. And once they've got two lots of 70 coming in, they can quite easily leave work. Well, they've already left work, but they can quite easily survive and create a good income and a good future for themselves. Now, you might be thinking, well, I'm not sure if I want to sell my house. Well, if you don't, that's your choice. I can't persuade anybody. I own my own home, so I'm not going to say to other people, don't buy your own home. I know there's a certain amount of kind of comfort and feeling of success or security if you own your own home. If that's you, fine, because that's me too. But this is a way of getting out of a full-time job and creating a good, decent income. On top of that, you might say, well, his own property would increase in value over 5 or 10 years or whatever. Well, I get that, but when you're creating this every 18 months to 2 years over a 10-year period, if you've got 5 of these, let's say it takes you 2 years to do one of these, over 10 years, if you've done 5 of these, that gives you best part of £350,000 that you're creating in income every single year. If you don't mind me saying, if you created that kind of income over 10 years, does anybody really care? If probably even if the value of the property that this person sold for 650 has doubled in value, well, he can afford it or she can afford it. They ain't too bothered, by the way, that the property price has gone up, and by the time they get there, they'll probably be able to afford an even bigger property than the one that they've got right now, or the one that they're renting out. I've got a second example for you which is very similar to this, but I think I've covered this pretty extensively to share with you exactly the point I was trying to make, which is sometimes you've got to let go of what you've got in order to get what you haven't got, but most people don't let go of that. And I will be recording a video going into detail about that, about how you sometimes got to get out of your comfort zone and risk or leave what you've got to the side to go for something bigger and better. But I hope this example here maybe gets your brain cells ticking a little bit, thinking possibly of, okay, what could I do if I don't have the cash? I can't find the cash. How can I create cash? Well, my property's got some cash in it. Why don't I use that? And this might, I hope, be sufficient and significant enough to encourage you to probably think about selling your own home, renting, getting into doing commercial conversions or other property strategies, and creating a good income. If you work full-time, leaving your job, and we can move on. Even better, I guess, what I would do if I was in this particular situation, which I'm not, is one of the flats, I'd probably stay in them and say, rather than paying 18 odd grand, live in the flats, I can kind of manage them, be there for the time being, and then when I do my next project, possibly move into one of those flats and rent the first one out, and then when I get to my third project, think, okay, I've created now 3 lots of 700 grand, which is £210,000 worth of income. Now let's move into one of the desired properties, and not wait 10 years, but do it in 6. That's what I would do. You don't have to do that. You can do whatever you like. But if you like this video, click subscribe so I can send you more content like this. If you've got any questions, post them in the comments below. More than happy to answer. And if you think this is a useful video, press the like button so I know the kind of content that you prefer.